Moved abroad recently? Just attained that shiny new NRI status? Well, welcome to this explainer. If you've just stepped off the plane in a new country, you might be feeling like the hard part is finally over. But I'm here to tell you, your financial journey, it's really just beginning. Look, we all know that packing up your whole life, getting visas sorted, and changing your physical address is a massive life event. It literally takes months of planning. But while you're busy setting up your new life over there, there's actually a silent countdown happening back home in India.
Here's the punchline. Just changing your mailing address simply isn't enough. Your entire Indian financial identity has to legally change too. If you continue to use a standard resident savings account after becoming a person resident outside India, well, you're directly violating the Foreign Exchange Management Act, or FEMA, and the penalties are absolutely no joke. We're talking fines up to 3 times the amount held in that non-compliant account.
Let's dive right into Section 1, Banking, specifically NRE and NRO accounts.
First things first, you've got to convert those resident accounts or open new ones specifically designed for NRIs. It basically boils down to 2 options. The NRO account is strictly your bucket for managing Indian income like rent or dividends. Just keep in mind, moving that capital out of India is capped at $1 million a year. Then you have the NRE account. That one is for your foreign income. It's freely repatriatable, and the interest is completely tax-exempt in India. Talk about a win-win.
Moving along to Section 2, Restructuring your Indian investments.
Your Demat account, mutual funds, stocks, and broker relationships, the whole shebang needs an update. You literally cannot legally trade using a resident Demat account anymore. You've got to convert it to an NRO Demat or open an NRE Demat under the Portfolio Investment Scheme. And a major heads up here, if you move to the US or Canada, you're facing extra hurdles. You'll need to submit FATCA declarations every single year. Plus, US-based NRIs face this thing called the PFIC tax trap. The IRS considers every Indian mutual fund a passive foreign investment company, which means your gains could get taxed at a punishing 37%, plus a daily interest charge.
Which brings us to Section 3, Tax Residency and KYC.
Time for some paperwork. You absolutely have to update your PAN database, your address proofs, and your KYC details. Actually, SEBI requires non-resident Demat accounts to undergo KYC re-verification every 2 years. But the absolute most important part here is correctly determining your tax residency based on your physical day counts in India. Generally, you're a resident if you spend 182 days or more in India during a financial year. But watch out, if your Indian income exceeds 15 lakh rupees, that threshold suddenly drops to just 120 days. Getting this math wrong could subject your entire global income to Indian taxation. No thank you.
Okay, let's hit Section 4, Managing Taxable Indian Income.
Leaving the country doesn't mean leaving the tax net behind. Notice how aggressively Indian income is taxed for NRIs right at the source. Get this, if a tenant pays rent to a resident landlord, there's no TDS until the rent hits 50,000 rupees a month. But for an NRI landlord, under Section 195, the tenant is legally required to deduct a massive 31.2% TDS from the very first rupee. And yep, that applies to interest, dividends, and capital gains too. You will more than likely need to file an Indian tax return just to claim any of that excess TDS back as a refund.
Next up is Section 5, Property, Insurance, and EPF.
Everything needs a thorough review post-transition. For property, if you eventually sell, those proceeds must flow directly into your NRO account. What about gold? Well, NRIs cannot legally buy new sovereign gold bonds, but you are absolutely allowed to hold on to the ones you bought before you left, and the capital gains at maturity still remain tax-free. Finally, please don't forget to update your contact details and nominations across your EPF and life insurance policies. You really don't want to miss crucial communications or, worse, lock your family out of their benefits over some outdated paperwork.
Let's look at Section 6, FEMA compliance in your checklist.
You need to set up a rock-solid compliance folder. Remember that $1 million annual repatriation limit from your NRO account? To actually move that money out of India, you can't just click Transfer. You are going to need specific chartered accountant certificates, namely Forms 15CA and 15CB, to prove your taxes are completely cleared. Keep meticulous records of every single remittance, investment, bank account, and tax form.
All right, let's bring it all together. Here is your rapid-fire countdown of the 10 exact actions you must take. 1. Convert your bank accounts. 2. Restructure your investments. 3. Update your KYC. 4. Segregate those NRO and NRE funds. 5. Calculate your tax residency accurately. 6. Track your Indian income. 7. Review mutual funds and stocks for international tax traps. 8. Manage your physical property. 9. Update insurance and EPF nominations. And 10. Maintain that bulletproof compliance folder.
Because at the end of the day, becoming an NRI isn't just a change of address. It fundamentally transforms the very laws governing your wealth. Ignoring these changes doesn't make them magically go away, it just makes them way more expensive when the authorities finally catch up.
So if you just became an NRI, you need to act on this checklist immediately. As a quick reminder, this explainer is strictly for educational purposes. Always verify current tax, FEMA, and RBI requirements with a certified professional for your individual circumstances. But before you log off today, ask yourself, what hidden non-compliant tax trap might be lurking in your Indian portfolio right now, quietly compounding daily interest penalties against you while you sleep? Thanks for joining me on this explainer, and I'll catch you in the next one.